Welcome to Kryptonite. My name is Ife, and in this video, I am going to show you how to trade futures. What you need to know before trading futures contracts. This video is going to be divided into different parts. Now, this would be the introduction, and I am going to walk you through all you need to know about futures trading. Before we start, it is important for you to know that futures trading involves a large amount of risk and it should only be done by professional traders. Also, take note that nothing I say in this video is financial advice. Always do your own research before investing into the market. Now let's jump right into this video. The first thing you need to know is what are futures contracts. Futures contracts is a legal agreement to buy or sell a particular asset at a predetermined price in the future. Basically, what this means is that you can bet on an asset to go up in value and you can also bet on an asset to go down in value. When the price of the asset goes down in value, you are going to short that asset. Understand? So you are going to make money when the price goes from a high level to a low level. And also when the price goes up in value, this is where you can enter a long position betting that the price of the asset you are trading would go up from a lower level to a higher level. So this is how futures contracts work. Traders bet on the direction of the price at a later time in future. This is how a lot of traders make money in the market. For you to start futures trading, you need to use an exchange. In the crypto space, the top two exchanges I use for futures trading is Bybit. This is one of the top crypto exchanges to use. If you go over to derivatives, you would see that they have lots of pairs right here to trade from. There are different assets to trade on Bybit, as you can see. And the second exchange I use to trade futures is Binance. On Binance, there are various crypto assets to trade from. Right here, you can see that you can trade various assets on the Binance exchange. The major difference between Bybit and Binance is that on Bybit, the taker's fee is 0.075% and the maker's fee is 0.025%, while on Binance, the maker's and taker's fee is 0.1%. So these are the two major differences between Bybit and Binance, and you would have to do your own research to figure out the best exchange you would like to trade on. Once you've identified the exchange you want to use, the next step is to go over to Tradingview and create an account. On Tradingview, you can create a free account and use that account for as long as you want. There are different plans on Tradingview, but if you are just getting started, you can stick with the basic plan. The basic plan would help a lot. All these other plans that you see here, all this Pro and Pro Plus and the Premium plan, these other plans would help when you are more advanced in trading. Now, once you've registered on Tradingview, you can go ahead and access the charts on Tradingview. This is exactly how the charts would look like. Right now, I am looking at the Bitcoin price charts and I am on the 4-hour time frame. Tradingview has lots of tools that you can see right here. This would help you when you want to analyze the price chart and you want to plan your entries and your exits. Right now, I have talked about what futures contract is. I have talked about the exchange I use when I want to trade futures contracts. And right now, I am going to show you how exactly I trade futures contracts. There are three things you need to know when trading. The first thing is you need to identify the trend the asset you want to trade is currently in, whether the asset is in an uptrend or in a downtrend. The second thing you need to know is momentum. If the asset has momentum, that is a good trading environment for you to actually place a futures trade. The third thing you need to know is volatility. You need to know if the asset you are trading has a high volatility or low volatility. I'm going to walk you through these three stages on how to identify the trend of an asset, the momentum of an asset, and also the volatility of an asset. The first thing, which is trend, you need to know the trend of an asset before trading that asset. For us to do this, we would have to use an indicator. The indicator that I use to know exactly when an asset is in an uptrend or a downtrend is the MA exponential ribbon. And you can go over to the indicator templates right here and you can click on this and I'm going to show you exactly how this works. Now, this is the MA exponential ribbon. Basically, how this works is that when price is above the ribbon, price is said to be in an uptrend. Now, the uptrend depends on the time frame you are looking at. For example, right now in this price chart, I am on the 4-hour time frame, and when price is above this ribbon, that means we are in an uptrend on the 4-hour time frame. You have to take note of different time frames when trading. I would assume that you have a bit of knowledge in trading, because for you to trade futures, you need to know exactly how to trade. You need to know how to use different time frames in trading. So let's continue. As you can see, This is an example of when the price is above the ribbon will tend to act as support, and this means that the price is in an uptrend, because when the price goes up, it comes down to the ribbon and continues to go up. So this right here is an example of an uptrend. As you can see, the price of the asset steadily goes up. So this is an example of identifying an uptrend using the MA exponential ribbon. Now let me show you an example of a downtrend. Let's scroll back. Right here is an example of a downtrend using the MA exponential ribbon. You would notice that when the price broke below this MA exponential ribbon, that is when the downtrend on the 4-hour time frame was confirmed. As you can see, the MA exponential ribbon acts as resistance in a downtrend. So this is what I use to identify whether an asset is in an uptrend or a downtrend. The next thing you would have to consider when futures trading is momentum. Momentum refers to how strong a trend is. So if you're in an uptrend, you need an indicator to show you the strength of the trend. What I'm going to use right now in this video is the stochastic RSI to show me when a price is overextended to the upside or overextended to the downside. Right now, I am going to bring out the stochastic RSI. For you to easily do this, you can go over to this indicators template right here and select oscillators. The first one right here is the stochastic RSI, and that is what we are going to use in this video. So I'll go ahead and remove the bottom two. This is how the stochastic RSI looks like. This is an oscillator, and you will notice that it oscillates between the 0 read and the 100 read based on the default setting. When this stochastic RSI stays at the 100 read, that means the price of the asset you are looking at is said to be overbought. And when the price goes to the 0 read right here, that means the price is said to be oversold. And like I said, overbought is when the price is overextended to the upside, and oversold is when the price is overextended to the downside. What you need to know using these oscillators is, for example, when the price is in the oversold region, it could stay in the oversold region for quite some time. But when this oscillator starts to go up, when this blue line crosses above this red line, that is when the momentum is picking up. Understand? So the momentum is picking up in a particular direction. If you correlate this with the price, you will notice that the price will continue to go up in a particular direction. So that's how to use this stochastic RSI. And if you go over to the price action, you would see exactly what I'm talking about. Let's go back to the price. You would see right here that when the price was close to the 0 read, that shows that the price is at an oversold level. The price was simply going sideways. But when this blue line crosses the red line, that's when the momentum began. As you can see in the price chart, the price starts to head in the upward direction. So this is how you identify momentum in a price chart. At the end of this video, I am going to put all these things I'm saying into entering a position. So I'm going to show you how you can enter a position based on these three things I am showing you in this video: trend, momentum, and volatility. Now let's talk about how to identify volatility in a price chart. The indicator we are going to use in this video is the Bollinger Bands. To access this indicator, we will go over to this indicators and strategies section and search for Bollinger Bands. This is the Bollinger Bands. There are two things you need to know when using the Bollinger Bands to identify when an asset has high volatility or low volatility. Pay attention to the bands, that is the upper band right here, and the lower band. What you need to know is when these bands start contracting, as you can see, that is when there is low volatility in the asset you are looking at. And when the band starts to expand, as you can see, this is an expansion. This shows increase in price volatility. You also need to understand that volatility is direction neutral. That means price could go up or down drastically over a period of time. So this is exactly how you identify volatility in a price chart. So let's go forward in price. You would see that when the price is contracting just like this, that means there is low volatility in the price chart. As a futures trader, you need volatility to make good price gains over a short period of time, because when the market is moving in any direction, that means there is profit to be made. So this is how you use the Bollinger Band to indicate price volatility. I have showed you the three things you need to know when futures trading. What I'm going to do right now is show you how to use these three things: trend, momentum, and volatility, in entering an actual futures position. Now this is the Bitcoin price chart and I am on the 5-minute time frame. What I will do right now is to bring out the MA exponential ribbon. Right here, you will see that the price went from a downtrend to an uptrend. So at this point right here, this is where I have identified the trend of the asset I am looking at. So what I will do right now is to mark this spot right here, and I'm going to show you exactly how to play this. I will leave a line right here. This is where I have identified the trend. So the next thing is to identify if this asset has momentum. So I would bring out the stochastic RSI. This is the stochastic RSI. As you can see, at this particular position is where I identified the trend. You will notice that the blue line crossed above the red line, which signaled momentum change from a downtrend to an uptrend. Now let's go back in price for you to see this clearly. You would see that at this particular point, the price continued to go in the upward direction. The next thing I would have to do right now is to bring out the Bollinger Band to show me how volatile this move is. This is the Bollinger Band. As you can see, at this exact position, the Bollinger Band was expanding. So this showed three things I would consider before entering a position. I have already considered the trend, which is to the upside, and also I used the stochastic RSI to see that there was a change in momentum. Now the third thing is to know if there is actual volatility present in this move, and that's what the Bollinger Band is showing me. If I was to enter a trade, this is exactly where I would enter this trade, at this particular level right here, and I would get the chance to take my profits at a higher level right here. So you need to consider these three things before you enter a position. It is true that a lot of traders lose money when trading, and that is why it is necessary to practice risk management. In my next video, I am going to show you exactly how to enter a trade and how you can practice risk management when entering a position. I truly hope you enjoyed this kind of content, and if you did, you can please leave a thumbs up and try subscribe to the channel. It really means a lot, and I would really appreciate it if you do. This is going to be it for this video, and I will see you in the next video. Goodbye.